Hey everyone, Meet Kevin here. Welcome back to another episode of the Meet Kevin Show. We are going back to our very first guest on the Meet Kevin podcast show on YouTube, Peter Schiff. We had a really exciting episode last time. Over 230,000 of y'all enjoyed it. And folks, we've got Peter Schiff coming back because last time we talked about GameStop crashing, GameStop crashed. We talked about the market crashing, the market crashed. We talked about Bitcoin crashing. Bitcoin started going down a little bit. We got some more talking to do with Peter Schiff. So I'm going to bring him on right now. Welcome aboard, Peter Schiff. What the heck is going on?
Well, thanks, Kevin, for welcoming me back. And, a lot is going on. And, technically, the market does not look good. I mean, it depends on what the Fed may do because they're the wild card, because they're the ones that can put a stop to the decline. But, the markets had been ignoring the relentless, pretty much daily rise in long-term interest rates. And, this despite the Fed's best efforts to restrain them. The Fed is still doing quantitative easing. It continues to intervene in the market, buying long-term treasuries to suppress the rates and to artificially prop up, the economy, which is overly indebted. From everybody, the government on down, corporations, average Americans have a tremendous amount of debt. And so the Fed is trying to lighten the burden of servicing that debt by artificially suppressing rates, which, of course, has profound negative consequences for the economy. But that's a side note. But despite the Fed's efforts, the market has been raising interest rates anyway. And until recently, until Thursday, the only people who seemed to notice were the gold traders, right? Because gold had been coming down based on the idea that a rise in rates was going to be negative for gold. But the other markets were ignoring the impact. And I think the stock market has a lot more to worry about from rising rates than gold does. And now I think people started to take notice. We had a big drop in the stock market, big drop in the NASDAQ. These stocks, these tech stocks, are particularly vulnerable to a rise in interest rates because these are growth stocks that are promising to pay earnings in the future, right? They don't pay any dividends now because they're growing their businesses, but they're supposed to eventually maybe pay some dividends at some point in the future. When interest rates are zero, well, it doesn't matter. You're willing to wait indefinitely because there's no opportunity cost of waiting. But as interest rates start to go up, the cost of waiting for your money in the future also goes up. So that means that the valuations of those stocks come down, and they have a long way to drop to get back to even a historic norm. So I think the technical picture looks very weak. I mean, we really broke down the last couple of days. The last hour to me looked very weak in the S&P and in all the indexes. And unless the Fed comes in and really reassures the market that it's going to print a lot more money, which I think the market should be able to figure out anyway, because that's clearly what the Fed's going to do. But I think the markets are waiting for something more proactive to stop the decline. Otherwise, I think it's going to continue.
Yeah, that's a very good point of view, that your opportunity cost right now is next to nothing. So it's okay to pay more for these highly valued stocks. But hey, as interest rates go up, that cost benefit analysis changes a little bit. But I got to ask you, this week we saw bond yields jump. The Fed's not raising rates. People are just not buying bonds. And all of a sudden the rates, the yields on these are going up. So how can the Fed bail us out of this? I mean, even if they just print more money, doesn't that just mean more treasuries at some point when the Treasury Department goes to inject some more money into the economy? It seems like we're going to get stuck between a rock and a hard place here.
Well, we are eventually. I mean, there's no way out of that. But what the Fed does is the Fed sets short-term interest rates. So it could pretty much peg those wherever they want. But the long-term rates, for the 10-year Treasury on out to the 30-year, they're determined in the market. Right. And you have supply, which is all the treasuries that already exist. And then you have the new supply, which is coming to the market, which is all the new treasuries that the government is selling. The House, I think today voted or yesterday to pass this $1.9 trillion stimulus. Right. All of that is paid for with debt. So the government has to issue, right, $2 trillion worth of new treasuries to borrow the money to pay for all the stimulus. So you have all this supply of treasuries on the market, and then you have the demand. Well, the demand is people that might want to loan money to the U.S. government by buying these treasuries. And I think the supply of willing lenders is drying up because more and more people realize that loaning money to the U.S. government for 10 years at 1.4% is a losing proposition. Because even the inflation that the government will admit to, which I think is still understating it, but the official CPI is higher than that. So people are not in the business of lending money to lose money. You make a loan because you want to get paid back more than you lend. Otherwise, what's the point of taking the risk of making the loan? So the government is running out of willing buyers. So what the Fed has done with quantitative easing is the Fed intervenes into the market and it buys up bonds that others don't to try to support the price, to keep bonds up and to keep rates down. And that's why the Fed's balance sheet is what, $7.5 trillion now, because they've had to buy all these bonds that nobody else wants. But what I think the Fed is going to do is really step up the pace of their bond buying to stop interest rates from rising. But the only way they can do that is to print more money, because that's where the Fed gets the money to buy the bonds. Printing more money is inflation. One of the main reasons that interest rates are rising is because people are getting more worried about inflation, and so they're demanding a higher rate of interest to compensate them for the loss of purchasing power of their money due to inflation. So as the Fed inflates the money supply to suppress interest rates and buy more bonds, they create more of the very thing that is causing people to want to get out of bonds. So ultimately what happens is the Fed chases everybody out of the market, and the Fed isn't the buyer of last resort. The Fed is the buyer of only resort. And the Fed is just an engine of inflation, monetizing government debt. And this is a recipe for disaster. We can have a crash in the dollar, which is much worse than a crash in the stock market or bond market, because that's going to take our entire standard of living down with it.
Jeez. So, that's interesting. I mean, do you think this could be a one-off, this rally in treasury yields, which led the stock market to sell off because of this $1.9 trillion stimulus package? Is that just being priced in that, okay, we're going to get a whole new round of bonds. Let's wait before we buy bonds. Yields go up. Let the Fed and the Treasury do their thing. Let them do their money printing and their bond buying. But that's it. It's a one-off. The stock market's just going to the moon after this again.
Well, it's not a one-off thing because the government has to finance the deficits every single year. So there is a tidal wave of supply down the pike. And I don't think this 1.9 stimulus bill is going to work. I think when the money is spent, we're going to have another stimulus. I mean, I just think it's just like a drug habit. And, you take some drugs and then you're high for a while and the drugs start to wear off and then, you need another fix. So I think we're going to have a string of stimulus bills that are going to continue to probably get bigger and bigger. But we already have this massive deficit that needs to be financed. The Social Security deficit is exploding because, a lot fewer people now are working. And so the people who aren't working aren't paying Social Security taxes. But you have all these people collecting benefits. More and more people are retiring early. So this is a huge drain on the budget. Social Security used to be in a surplus. Now it's in a huge deficit, getting bigger and bigger every day. So the Social Security, quote unquote, trust funds, they're also unloading treasuries to bridge the gap between what they collect in payroll taxes and what they're spending in benefits. And then, what people forget is that there's all these treasuries out there that we sold, right, in the past. We have a $27 trillion national debt, but a lot of those bonds mature, right? People bought them years ago, and now they mature. Well, they don't want to roll them over. And so now the U.S. government, not only do we have to fund this year's deficit, but we have to refund prior year's deficits. We have to find new buyers for the people who bought bonds years ago, and now we have to pay them back. Well, where do we get the money to pay them back? Well, we got to find new buyers, new lenders to do that. So it's a gigantic Ponzi scheme that the U.S. government is operating in its own debt. And so all these chickens are coming home to roost. So this is massive supply that's going to hit the market. And if you think about it, the U.S. government today has more debt than it's ever had in the history of the country. And, anybody knows, right? You do borrowing, in real estate, or as you have more debt, you become a worse credit risk, right? The more debt you have, the harder it is to repay. And so because America has more debt than we've ever had, does it make sense that we have the lowest interest rates that we've ever had? I mean, how can we be a better credit risk today when we have $27 trillion worth of debt than we were when we just had 1 trillion? And we didn't even get to 1 trillion until the Reagan presidency. But how can we be a better credit risk now than we were then? It's obviously impossible.
Now, do you believe then that, because there's so much talk about the Fed is going to taper bonds, and then after they taper bond purchases, they're going to raise rates. That the expectation is that that could happen sooner than expected. Fed says, don't worry, not happening until 2024. A lot of folks say, no, it's going to happen sooner. It sounds like you actually think they're going to go in the opposite direction. They're going to print more bonds, and could we even see negative yields?
Oh, yeah. Look, you go back to the beginning, when the Fed first started BSing everybody that it was going to shrink its balance sheet and normalize interest rates. Years ago, this is under Bernanke. I was out there on my podcast and on, whatever news network would invite me on, and I was saying that this was a lie, that it was impossible, that there was no way the Fed was going to normalize rates, that they would never bring them back to normal, that the economy couldn't afford a normal rate of interest with an abnormally high amount of debt. And I said if the Fed ever tried to shrink the balance sheet before it got anywhere near back down to where it was before they started, they would have to reverse course. And that's exactly what they did. I was proven right. All the people that thought the Fed was going to do that were wrong. We're back at zero, just like I said we would be. And we've got a $7.5 trillion balance sheet. The highest it got before they started tapering was $4.5 trillion. Now, when the Fed really tried to normalize rates and taper, right, we had that taper tantrum, and the markets fell apart in the fourth quarter of 2018. We had the worst December since the Great Depression in the 1930s. The wheels were coming off the bus, and the Fed quickly put a stop to that. No more rate hikes, no more tapering. And then when we got March of last year, when the COVID scare began, we were right back at zero, and we went to QE infinity. So the Fed is not going to be any more successful in trying to, taper this time or raise rates than it was last time. In fact, it will be less successful, because today we have a lot more debt than we had in 2018. So if the Fed couldn't normalize interest rates when we had a lot less debt than we have now, how are they going to do it now? Because the more debt we have, the harder it is to raise rates, the more dependent the economy is on those artificially low rates. So the markets still haven't come to terms with this, that the Fed could talk all they want, but it's all bark and no bite when it comes to any kind of rate hikes or tapering. They are going to be, they can't cut, right? Because they're at zero. Unless they're going to go negative, right? They can't cut. So all they can do is print. And I think that's what they're doing. They're going to print more and more money until the dollar crashes. That's going to be the only thing that brings an end to this, right, is when we have a currency crisis. Because every other crisis, they can kind of kick the can down the road by printing more dollars. But when we have a dollar crisis, we can't print our way out of a dollar crisis. Because if you try to do that, you just make the crisis worse.
So this is so fascinating, because everyone is talking about the Fed. They're going to raise rates sooner than expected. They're going to stop their bond purchases. You've got Cathy Wood and Art going. Yeah, that's because you're right. I remember the summer of 2018. That's when they were really bumping rates more aggressively. Jerome was, I think, a couple rate hikes just at the beginning of the year there. And real estate sold off like 12% like this. The stock market followed in December, like you mentioned. They weren't able to do anything with raising rates.
And they keep talking about the strong economy. They say, well, we have this strong economy, so they're going to raise rates. We don't. We have a bubble economy because rates are low. If they try to raise rates, they'll prick the bubble. Look, it is not a strong economy when people spend money that the government prints and then mails them. That's what's happening. Like if you look at the personal income numbers that came out on Friday, this big jump, 10%. Oh, we've got a strong economy. Where did that money come from? Welfare payments, unemployment payments. If you take out these government transfer payments, personal income actually dropped. So if all of the gains of income are coming from government printing money and giving it to people to spend, that is not a strong economy. A strong economy is where people are working productively and they earn their income by producing goods and services, not sitting at home, on Netflix, cashing government checks. That's not a strong economy. And if you look at our trade numbers, our trade deficit is exploding. That you look at these photographs of all these container ships, backed up for miles, trying to unload stuff. And then all the ships go back empty to bring back more stuff to bring here because we got nothing to ship because we're not making stuff. We're just borrowing money to consume what everybody else makes. But all of this is because of the cheap money. It's all because of government spending. Where's the government getting money to spend? From the Fed. And if the Fed let interest rates go up, look at the amount of interest that the U.S. government is paying on the national debt. Even though we have a record high debt, we're barely paying any interest. Well, if the Fed lets interest rates go up, the government does. Where's the government going to get money to pay the higher interest? It's like, the individual has a teaser rate on a home mortgage and he can barely afford the teaser rate. And then the rate goes up. Now, what is he going to do?
How long though is the Fed locking these in for? I mean, if they're aren't they locking?
Oh,
these
no,
in,
the average maturity on the. Oh no, I don't know. It's a few years, but every month stuff is maturing, right? I mean, there's so much. Maybe over the next year, maybe 10 trillion is going to have to be refinanced. I mean, can you imagine that if you had your mortgage for a house instead of having a 30-year fixed, right? You had a balloon payment every few years. You had to refinance the whole thing. I mean, how could you even sleep at night? You don't know what the interest rates are going to be. Can you find a lender? But the reason the U.S. government doesn't try to finance the debt by actually selling all long-term bonds is because if they did that, they would push up the interest rates, and they can't afford it. So it's like somebody who's buying a house. They don't want a 30-year fixed rate mortgage because they can't afford that one. So they take a 1-year adjustable because that's all they can afford. But the problem is, what happens if the rate goes up? They own a house that they can't afford the payments. I mean, the U.S. government is gambling with the taxpayer by putting them on the hook for what could happen if interest rates go up. And I hear this all the time where people say, hey, the U.S. government should take advantage of these low rates. We should borrow a lot of money now for infrastructure or other programs because, we have these low rates. But the government's not locking in those low rates. That's the problem. It's borrowing now, but it's not locking in the rates. What would happen? What if interest rates went up to 10%? Right? I mean, they went up to 20% when Volcker was president. I mean, was president of the Federal Reserve when Reagan was president. What if they went up to 10%? I mean, if the national debt goes up to 30 trillion, which it will probably be, this year, 10% of that is $3 trillion. I mean, that's more than the government. That's more than the government collects in income taxes right now. I mean, that's almost as much as the government collects in total taxes.
I mean, really, it's the issue becomes this constant rollover, which is maybe why they never did this 100-year Treasury bond that there was talk about.
Well, I'd like to see the idiot I'd like to see the idiot who wants to buy that.
Right.
I mean, first of all, why are you going to loan somebody money for 100 years? I mean, who's going to live for 100 years? I mean, what's the point of making a loan that is not going to be repaid until after I'm dead? I mean, I mean, so the whole thing is laughable that somebody would even want a 100-year bond. But what was the rate going to be? 2%, 3%? I mean, I don't even know if there's going to be $1 in 100 years.
Jeez.
So
is this the California, like the California-ification, if I could say that, of the United States? Are we becoming sort of a dependent country on these constant injections of stimulus, like you had mentioned? So in California, you've got a lot. What is it? I think 35% of folks on Medi-Cal because they can't afford Medicaid or medical insurance out here. Are we going to keep seeing more and more of these programs potentially under the Biden administration, where we just keep these transfer payments coming and keep the support coming, and the Fed's just going to keep going and going and going? Is it really just going to keep going?
Well, until there's a dollar crash. I mean, the welfare payments are only as good as the dollars that you're getting paid. So once the money doesn't have any value, then it doesn't do anybody any good. But in the short run, the Democrats have a very powerful incentive to impoverish people and to make them dependent on government checks. because that's how they buy their votes. The minute you can take somebody who, is viable and self-sufficient and cripple them to the point where the only way they think they can survive is if they get government money, then those people are going to vote for whoever's promising to continue providing that money. So that's what the Democrats want to do. They want to create dependency so that they have a vote, right? In theory, what the Republicans want to do is they want to liberate people so they don't need government. But then if you don't need government, then you're not as incentivized to vote for government, right? When people are saying, hey, vote for me and I'll leave you alone, that's what I want to hear. But a lot of people, that doesn't really sell. If it's vote for me and I'll give you a bunch of money that you didn't earn and I'll take it from some other person, yeah, that's who a lot of people want to vote for. And that was how Biden won, by promising to give away free stuff. And, so now he wants to make good on those promises.
The dollar crash, other than, these declines in the dollar that we've obviously recently seen, what other catalysts do you look for a dollar crash? And what does the economy look like when that crash occurs? Do we go to Bitcoin? What happens?
Well, I don't think we'll go to Bitcoin. But, right now, people still believe that the Fed will raise rates. And if you hear, Powell's his testimony, he just testified on Capitol Hill that he's not worried about inflation, that everything is fine. In fact, the Fed is determined to achieve their goal of 2% inflation, which is a ridiculous goal. I mean, if inflation is 1%, it's better to have it go down to 0 than to go up to 2. There's nothing magical about a rising cost of living that should be a goal that we should strive for. But Powell said that he thinks that despite their best efforts, or they're giving it a really valiant college try, they're hoping that they'll get the inflation rate up to 2% in 3 years. That's their goal. I mean, which I think they're already way past 2. But then he said, look, the Fed doesn't, we don't always get it right, which is putting it mildly. They pretty much always get it wrong. They have a very bad track record. But Powell said, if on the rare chance we're wrong, right, and inflation actually gets to be higher than we thought, he said, well, we have tools to deal with that. They may have the tools, but there's no way they're going to use them because the Fed is not going to raise rates while we have high unemployment because it'll, they're going to, they're not going to do that. So it's a bluff that the Fed is going to use these tools if, their situation arises. But right now, what's supporting the dollar is the belief that the Fed will hike rates if inflation becomes a problem, that the Fed will protect the value of the dollar, even if it means a massive collapse in the stock market, a massive collapse in the real estate market, a huge recession, lots of unemployment with no government stimulus. Because remember, if the Fed is raising rates to fight inflation, and if we're in recession at the same time, there could be no government help, right? Because the Keynesian remedy to fighting recession is run big deficits, lower interest rates, print more money. Well, if you're fighting inflation, which is the opposite, shrinking the money supply and raising interest rates, you can't do both of those things at the same time because they're the opposite. So what the Federal Reserve would have to do to stop inflation from running out of control is, raise rates and allow the recession to run its course with no government help. No stimulus, no bailouts. What's the odds of that happening? 0. When the market figures out that the Fed is not going to stop inflation, that the Fed is going to fuel inflation, instead of raising rates to fight inflation, it's going to create more inflation to prevent inflation from raising interest rates. So when the markets figure that out, then the bottom drops out of the dollar. Then we have a dollar crisis. And then, only then, may the Fed be forced to do the right thing because they'll have no choice.
Now, how much is technology potentially going to bail us out of this, given the deflationary nature of technology? Is it possible that we're just going to deflate faster than we might inflate? And who knows, maybe we keep money printing for the next decade.
Well, first of all, remember, inflation is a monetary phenomenon, and so is deflation. So inflation is money supply going up. Deflation is money supply going down. Now, apart from inflation and deflation, you have the overall supply and demand for goods. And technology helps increase the supply of goods because it makes the production of goods less expensive. We can produce more stuff for less units of input, less labor, less raw materials, less capital. So we get more abundant stuff, and that helps keep the price of stuff down. That's progress. That's capitalism. That's a good thing. That's what happens. Now, when the government comes in and creates inflation, it's harder to see the decline in prices. That is a natural result of a free market economy. And so I think technology will continue to bring down production costs, but not nearly enough to offset the destruction of the value of the dollar and other costs that are going to be going up, raw material costs, labor costs. Remember, as the dollar goes down, all these costs go way up because, a lot of American companies, right, they have outsourced to foreign workers to keep their labor costs down. Well, when the dollar goes down, all those foreign workers become much more expensive to employ. And all the materials, all the raw materials. I mean, look at oil. Oil last week got up to almost $64 a barrel. It pulled back a little bit. Yesterday dropped a couple of bucks. We're now just below 62, but we are moving higher. I think oil could be $100 a barrel before the end of the year. And, we're not producing nearly as much oil now as we did back in 2014, which I think was the last time oil was that expensive. And so we're more dependent than ever on importing oil. And when it gets a lot more expensive, I mean, that's going to run up the cost of all sorts of things. So no, I don't think that we're going to get bailed out from technology. I mean, what really saved us in the past was outsourcing all of our manufacturing to places like China. And so that helped keep a lid on prices, because if we had to make all that stuff ourselves, it would cost a hell of a lot more. So we've been able to mitigate the effects of inflation by outsourcing. But the consequence of that has been these massive trade deficits, and our external debt has ballooned. So we're a massive debtor nation now. I mean, we used to be a creditor nation. We used to be the world's biggest creditor nation. Now we're the world's biggest debtor nation because we've borrowed so much money to live beyond our means. But I think the ability to do that is coming to an end because we've already outsourced so much. And now when the dollar tanks, now the cost of bringing all that stuff back home is going to go way up. So no, I don't think there's going to be any way that we're going to be able to dodge this bullet.
Wow. And how long until you think this comes? Because it just, I mean, forgive me, but it just seems like the Fed has a knack for keeping this going over and over and over again. I mean, ever since Greenspan, it just seems like it's just constantly like I think it keep going.
Yeah, look, you can keep doing it until you can't. I mean, eventually the dollar is going to have to break. And, each time they have to revive the economy, it requires a bigger and bigger dose of this monetary heroin. And so every time you increase the size of the dose, that could be the fatal one. And I mean, think about how enormous it is now. I mean, if things starts to fall apart, I mean, look how much they had to do with COVID. And now if this even bigger bubble starts to deflate, I mean, look at how much money Americans now, if you look at the unemployment rate, and even Powell will admit that if you back out, a lot of these numbers, Powell thinks the real unemployment rate is over 10%, and which is higher than it was, or as high as it was at the worst point of the Great Recession in 2008, 2009, which was the worst economic downturn since the Great Depression. And so we now have the same amount of unemployment as we had then. But look at Americans are spending money like crazy. I mean, we're spending a lot more, even though we're not working and not producing. So, I mean, this is all a bubble. And I mean, you see what's going on in the real estate market. But look at the prices. Look at the price of lumber. Lumber hit an all-time record high. Look at the price of copper this week. Copper got up to about $4.35 a pound. The highest it ever was $4.50. I think that was back in 2011. But we're gonna take that out. But I mean, all these prices are just soaring, and people are still massively unemployed. And a lot of people haven't even spent a lot of the stimulus money yet. A lot of that stimulus money is still in people's pockets. They haven't even spent it, but they're going to. And now, before they can even spend that, there's another check that's arriving in the mail.
I hear there might be a good chunk of the next stimulus payment going into your favorite hedge, Bitcoin. Can you speak to if you distrust what's going on in the government and what's going on at the Fed, which we know is technically independent of the government, why not Bitcoin?
Well, there's no doubt that some of these younger Bitcoiners will take some of that stimulus money and just buy more Bitcoin with it. I've got no doubt that they'll do that. And, I think that there are some people who are buying Bitcoin because they don't trust the Federal Reserve, they don't trust the dollar, and they'd rather own Bitcoin instead. But I think the greatest appeal of Bitcoin is the belief that it's going to moon and that you're going to get rich by buying it. I mean, people are not buying Bitcoin to preserve the wealth that they have. People are buying Bitcoin because they think in doing it, they're going to get rich. And they think everybody else is going to be poor, right? I get all these texts from people, have fun staying poor, because I don't have any Bitcoin. So people think they're going to get rich quick and get rich easy just by buying Bitcoin. But, it's not that easy to get rich, but it's very easy to go broke. And I think one way to go broke is putting all your money in Bitcoin. For the people that are only putting a little bit of money in, the way they would put a little bit of money in when they buy a lottery ticket, I guess I can't, you want to do that for fun. But putting serious money into it, I think is a big mistake because I don't think it is going to ever succeed in delivering what it's promising, which is to be money, to be either a store of value or a medium of exchange or a unit of account. I think it fails in the ability to do any of those things. People say, well, look, it's a store of value because look at how the price has gone up. No, just because the price of something goes up doesn't mean it's stored any value. It didn't have any value to store. It has a price. Yeah, I mean, anything could have a price, as long as somebody is willing to pay it. But there's a difference between value and price. That's how come something can be overpriced, right? If you can objectively define a value, and then you can look at the market price. That's how, as an investor, when I'm looking around at stocks and I try to determine, hey, what's this business worth? And then you look at the price. And if it's expensive, well, I don't want to buy it. But if I find, $1 worth of assets that or value, and I can buy it for 50 cents because the market doesn't understand it, then that's an opportunity. Hey, I got something that's underpriced. Well, I think Bitcoin's real value is zero. And so any price is overpriced. So now at, $7,000 or whatever it is, that it's all, nothing, but that's the price that people want to pay. But if I'm right, eventually people won't want Bitcoin at any price. I mean, if you could take it down to 20,000, 10,000, 5,000, I think when the appeal is lost, when people realize it's not going to be money and it's never been money, then what good is it? Right? It doesn't, you can't do anything with your Bitcoin.
You're essentially saying, to be blunt, that it's worthless, and there's a real possibility it could go to zero when people realize it's worthless. Isn't it possible, though, that people want to invest in blockchain, and this is an opportunity to do that?
I don't see how Bitcoin is blockchain. Just because I buy a Bitcoin, and blockchain is a tool that companies could use. I mean, there's all sorts of ways that people can use a blockchain. But just because I own Bitcoin doesn't mean I own anybody's blockchain. Just the other day, MasterCard came out. There were some rumors, MasterCard is going to incorporate Bitcoin. And I was like, oh, there's no way they're going to do that. And then they just came out Friday and said, yeah, we're not going to do it. They made a big deal about saying we're thinking about it. But they said, we can't use it because it's too volatile. You can't, and it's too expensive. So it doesn't make any sense as a payment. And they had an example. They said, look, nobody's going to use it to buy a cup of coffee, which is true. But who could create a digital currency if they wanted to? Starbucks. I mean, Starbucks could launch. Starbucks could launch its own currency, which it will accept at any of its restaurants for a regular cup of coffee, right? I have to have, or maybe a latte, or they'd have to say this particular Starbucks, right, is good for one regular cup of coffee at any of our restaurants, and they could use a digital currency, and that would be a Starbucks. Now anybody can go into Starbucks and use that Starbucks and buy a cup of coffee. Now, it would be a much better digital currency than Bitcoin, because assuming Starbucks doesn't go bankrupt, because, it's like a note, right? It's a note from Starbucks,
like a
but
gift card.
they're going to give you a cup of coffee, but it's an inflation hedge, because if you hold on to that and you go in there in a few years and they've raised the price of a cup of coffee, you can still buy a cup of coffee with the one Starbucks, because it's good for a cup of coffee. So I could use it as a medium of exchange, as a store of value, but I can also use it as money. I can give it to somebody else because they know that they can take it to Starbucks and get a cup of coffee. And I can even give it to somebody who doesn't drink coffee, because they know that, well, somebody drinks coffee. And so if I want to buy something, I could use this Starbucks. And so that would be real currency backed by a cup of coffee. McDonald's could do the same thing, backed by a hamburger. Any private company can issue a digital currency backed by the goods and services that it sells. And obviously, the guarantee, or the store of value, is only as good as the company, right? Because if McDonald's goes bankrupt, then all my McDonald's bucks are worthless. My McBucks, or if Starbucks goes bankrupt. But obviously, you have big, solid companies that people don't think are going to go bankrupt. People will have confidence. So some fly-by-night, coffee shop tries to issue a digital currency, I'm not going to want that. Who the hell knows who you are? But if Starbucks wants to issue a digital currency backed by coffee, sure, I know Starbucks. I'll trust that, because that's what everybody used to do. Banks used to issue paper currency backed by gold. Now, of course, the best thing is a digital currency backed by gold, because gold, there's a price, a historical price between gold and coffee, right? If the price of coffee goes up, the price of gold is going to go up. Right. So if I want to hedge my coffee, I don't necessarily have to store a bunch of coffee. I can store some gold, and I can, buy coffee with my gold, or I can sell my gold at a higher price to buy the higher price coffee. But the problem with Bitcoin is it doesn't satisfy any of those conditions, because Bitcoin is nothing. I can't use the Bitcoin, just like I can drink a cup of coffee. I can eat a hamburger. I can take gold and I can make it into a ring. I'm wearing a ring here. It's made of gold. So I can make my gold into a ring, or I can do all sorts of things. We're talking to each other with computers. There's gold in the chips. Gold is used in all sorts of things, even if you don't use it yourself. It just frustrates me all the time when I hear all these Bitcoin people talking about how gold is useless, how it's worthless. They got it backwards. It's Bitcoin that's useless and worthless. Gold is very valuable. That's why it became money in the first place. If it was useless and valueless, then nobody would have wanted it as money.
So really, what you've just described is very fascinating, because you've linked the value of something to being pegged to something else, whether it's the dollar being pegged to the full faith and credit of the United States, the Starbucks linked to the value of a "Don't Sue Me Bro" cup of coffee or whatever. And that's where you're also suggesting, hey, if we had a digital currency that's pegged to gold, great. So I guess.
Well, but Kevin, I'll make a point here. See, that's the difference between money and currency. Let's say we were going to use coffee as money, right? Coffee is our money. That's the commodity. But a digital currency backed by coffee, see, the currency is a coffee substitute, because for me and you to start paying each other, oh, that's 5 cups of coffee, that's 4.5 cups of coffee. That's cumbersome. But if we have a digital currency that's backed by the coffee, that's easier to use. See, that's what happened with gold. I had my gold, and I'd have somebody store it, and they would give me notes. And then instead of lugging my gold around, if I wanted to buy something, I would say, hey, I own some gold. Here's proof of it. And I'm gonna give you this note. So now you own the gold. It's stored with this blacksmith that we all trust, which later became a bank. So money doesn't have to be backed by anything, because money is a commodity. And what backs money is the tangible use of the commodity. So if salt was money, the Romans paid their soldiers in salt. That's where the word salary comes from. Well, why was salt money? Because people put salt on their food. They use salt to keep their meat fresh. So there was a use for salt. But let's say I wasn't using salt, but I had salt in a big vault, and then I issued pieces of paper that were redeemable in salt. Those pieces of paper would be currency. They would be legitimate currency because they were backed by salt. Now, what we have today, which is fiat currency backed by nothing. So money is a commodity like gold, which can function as a medium of exchange and as unit of account and a store of value. Currency can substitute for money because it's more convenient to use, but it derives its value from the money that backs it up. Fiat currency has no value, is backed by nothing, and it's only worth what people think it's worth. It's all based on confidence. That's Bitcoin. The difference between fiat currency and Bitcoin is that the dollar with fiat currency is issued by the government and it's legal tender, and Bitcoin is, just mined by all these miners and it's not legal tender, but the value still comes from confidence and faith. People have to think it has value. And if they think it has value, maybe they'll buy it. But if they no longer think it has value, they won't buy it. Gold's value has nothing to do with what I think. Gold's value is objective and tangible. Right? There's things that you can do with gold, and you can't deny that.
So if money is backed by value, like in your salt example, we like this money because of its value in redeemable salt, then in some sense, wouldn't the United States dollar be potentially a better investment than Bitcoin, because at least you have the government putting their faith in that dollar?
Yeah, I mean, I think the chances of Bitcoin going to zero are greater than the chances of the dollar going to zero, at least in the near term. I think, over the course of time, eventually the dollar will go to zero too. I mean, there hasn't been a fiat currency that hasn't gone to zero. So, I mean, it will. But I think, there's a lot at stake for the government to eventually prevent the dollar from going to zero. But it can lose 90% of its value, so it'll feel like it's worthless. But we may still use it. Although it's possible that the old dollar could go out and we could have a new dollar. But another way for people to understand money is to understand that money just made barter more efficient, right? Because human beings always traded with one another. And before money was invented, you traded what you had for what you wanted. Right. So if I was a butcher and I had some meat and I wanted, a candle, right? I had to find a candlestick maker that wanted my meat, right? And we had to figure out how much meat is equal to that candlestick, and then we would make a trade, right? But maybe the candlestick maker is a vegetarian. He doesn't want my meat. Shit, I got to find a different candlestick maker. He doesn't want my meat. Sure. So it was not very convenient. So when mankind came up with money, it was, hey, what's one good that we can all accept, that we don't have to barter. And gold was the ideal commodity, because gold is a real good, just like meat, just like a candlestick. A gold is another commodity. But instead of trying to figure out how much meat is equal to one candlestick, we'll just have everything priced in gold. How much gold do I need for a candlestick? How much gold do I need for meat? And for the baker, how much gold do I need for bread? And so now the butcher, the baker, the candlestick maker, they're not, trading around in bread and candlesticks. They pay each other in gold, and there's a way to price everything and tie it into gold. But that's because gold is also a commodity, and so its value, its use, can relate to the bread or the meat or the candlestick. But Bitcoin is used for nothing. There's no way to know how much Bitcoin should be a loaf of bread be worth, because it doesn't have any value. It's not a good in and of itself. Gold was a real good. Now what you could say is, hey, instead of just everybody paying each other in gold, let's take the gold, put it in a safe somewhere, and we're all going to use these pieces of paper that are backed by that gold in that safe. We all know the gold is there. Anybody can get it when they want. But in the meantime, we'll just use this piece of paper that represents that gold, right? Now, because we can't do that with the meat, because the meat could rot.
Sure.
Yeah.
I see the crux of the argument here as really the store of value in gold. But what confuses me is, isn't it possible that the greater likelihood is that the bull run continues, that the government prints this money, jumpstarts the United States economic engine, unemployment goes back to 3-4%. We have a massive boom in this decade, especially once our economy fully reopens, and really we just see everything continue to go up. We don't see inflation because of the technological forces we talked about. And isn't there a greater chance of a big bull run here throughout the next 10 years?
Well, first of all, there's no engine to restart. I mean, the engine is dead. We haven't been running on a real engine in decades. We're running on inflation. That's the problem. And yes, can the government keep printing money? Yes, of course. That's the one thing they can do. That's why I'm not short the stock market. I haven't been short the stock market, because I know that the government can keep blowing more air into this bubble by inflating. But this is not economic growth. All the government can do to delay the day of reckoning is to make the problem bigger. Will they try? Of course. That's all they want to do. They just want to push off the consequences until the next election, because then maybe it's going to be somebody else's problem. So yes, they are going to keep doing that. They're going to print more money. That's my point. So the stock market will make a new high. Even after it falls, it depends on how much the market's going to fall before the Fed rescues it. It's like a game of chicken. Right? The market keeps going down and the Fed pretends it doesn't care until eventually it proves that it cares by giving the addicts on Wall Street what they crave, which is a big fix of monetary heroin. So yeah, we're going to keep on getting a higher stock price. I think stocks will be overvalued, but the dollar is going to crash. That's what's going to ultimately is going to be the dollar. And look, the price of gold is going to keep rising. It got to 2,150, I think, last year. That was an all-time record high. So now we've actually pulled back. We've almost gone into a full 20% decline. I think it's down about 17%, down about 9% on the year. We're 1,700 and change, but 2,150 is not the high. Gold's going much, much higher. I mean, because the dollar is going much, much lower. When we first went off the gold standard, really, gold was $35 an ounce. It was $20 an ounce in 1932, and then Roosevelt devalued. But gold price stayed stable at $35 an ounce from 1932 until about 1970. And then we went off the gold standard and went from $35 to $2,150. Now that is not over. Gold did not stop going up because they're not going to stop debasing the dollar. So yeah, I just think it's going to end in a crisis. We've been able to avoid the crisis, but at the expense of making the problem much, much worse. So the reason for adopting a defensive investment strategy, which is the one that I espouse and the one that I follow myself, which is have some gold, but invest most of your money outside the United States so you can get out of the US dollar. You want to own good quality stocks that are, where you're getting good value for your money, but you want to own them outside the United States in countries that are not a complete economic basket case, really like the United States. And you want to be able to have companies that will pay you in dividends that are not going to be in currencies that are going to collapse in value. You want to get dividends that you can actually use to buy things. And so that is a much better hedge against inflation, owning quality dividend-paying stocks outside the United States and then having some real money in gold and silver. That's much better than just gambling on a digital string of numbers.
Isn't there more currency risk outside of the United States than in the United States? I mean, look at the issues we've got in, for example, Greece or Europe with the EU, or worse, go to the flip side and go to like Venezuela. Aren't you exposing yourself to more risk in other areas of the world than trusting in the dollar?
Well, first of all, we don't have any money in Venezuela, so that's not a risk that I'm taking. But
so you've been choosy, okay.
But look, we do have some euros, and Greece is part of the Eurozone. And I definitely see some risks in the euro. That's why, we're not all in the euro. I mean, we have some exposure to the euro, but, there are other countries that are in much, much better shape than Europe and the United States. I think when it comes right down to it, Europe has problems. The U.S. has an even bigger problem. That's how screwed up we are, that we're even more screwed up than Europe. So I think our risks, our currency risks, are worse. I think our risks are worse than Japan. I mean, there are other countries that have run up big debts, but I think America is the most vulnerable. So there's risk in every currency that you own. Now, a lot of Americans don't think about risk in the dollar because they don't see any fluctuations in the dollar because they're comparing it to the dollar. So the dollar will always be worth $1. right? That's not the case for the Swiss franc or the Australian dollar, right? They're going to fluctuate every day. But even though a dollar will always be worth a dollar, what's a dollar going to be worth in terms of what it will buy you? And so if you think about not just currency risk, but purchasing power risk, that's how you want to look at it. If I store dollars, how much purchasing power am I likely to lose over time versus storing Swiss francs or New Zealand dollars or Swedish krona or any one of these other currencies? Which currency is going to lose less value over time? I think the dollar is more risky. I think the least risk is gold, right? I think gold will do a better job over time, not on a daily basis, but over longer periods of time, years, decades. Gold is going to preserve much more of your buying power. As I said, if you put $35 in the ground in 1970, if you buried $35, what can you buy with that $35 today versus what you could have bought in 1970? I mean, a fraction of the stuff. But if you buried an ounce of gold in the ground in 1935, in 1970, and when you buried it, you bought it for $35, and you dig it up today and it's $1,700, obviously you can buy a lot more with the ounce of gold than $35 in cash, right? So
Sure.
Gold will do a better job, but you don't have to bury your money in the ground. You can invest it. So if I could take my money and invest it in a company, right, a stock that is growing their earnings and paying good dividends, that's better than just burying my gold in the ground. Gold is not a long-term investment. Gold's not going to grow. It's just there, right? So you can preserve value in gold. When you invest money, you're trying to gain value, not preserve it. So like when people compare gold and they say gold's a lousy investment compared to the stock market. Well, of course, because gold's not an investment. It's money. It's a commodity. What you have to compare gold with is dollars or euros that you just put in, stuff them under your mattress. So if you're going to take, something and stuff it under your mattress, you're much better off with gold coins than paper dollars. Problem is you can't stuff Bitcoins anywhere because they don't have any substance. But I think Bitcoins are just a gamble. I don't think Bitcoins will have any value in 100 years. They probably may not even have any value in 10 years. I don't know. I don't know how long this bubble is going to go on. But I wouldn't want to gamble on it.
Now, a question I have for you is Greece and Italy and some of these European countries, Portugal, Spain, have had massive periods of austerity, or really to prevent the need to continue printing money, just by cutting expenditures. And you drive through some of these cities outside Athens, for example. There's trash everywhere. They don't have enough trucks, or at least back when the austerity was happening.
They haven't done
I don't
that
want
recently.
to paint. No, and I don't want to paint with a broad brush here, but what I'm trying to go back to that 2013, 2014 time when we saw this. Are you suggesting that the United States needs more of that? Kind of like what, Portugal, Italy, Greece, Spain saw?
Oh, more. And, they haven't been
Wow.
doing it because they've been relying on Germany. And it's, unfortunate for the Germans that they've taken on this. But no, what we need is austerity at the government level, number one, right? The government has to cut spending. But yeah, I mean, people have to live within their means. I mean, we have to stop encouraging people to go out and spend money. I mean, we need to save money. I mean, if we're going to have a real economy again, if we want to be self-sufficient and be able to produce the things that we consume and not have these huge trade deficits, I mean, we don't have to produce everything we consume, but we have to produce something because we need to trade what we produce for the goods that other people produce. That's what trade is about. It's not about just, going into debt. We have to make stuff either that we want or that consumers in other countries want. But the way to make stuff is you need capital, you need savings, you need investment. We don't have it because we're spending everything. So the whole American economy needs to go through a transformation from an economy where we borrow and spend to an economy where we save and produce. Now that transition is going to be very painful for a lot of people. A lot of people are going to lose a lot of money. But it has to happen. I mean, the pain is going to come eventually anyway. But this way, at least it will be constructive pain. But then there's a big light at the end of the tunnel. If we can get back to the type of economy we had before the government screwed it up, right? we will be much wealthier. I mean, think about what it was to be an American in the 1950s. Where did the American middle class come from? You know, this wasn't a fantasy if you go back and you look at some of these old television shows, but a man back then who didn't even go to college. In fact, you didn't even have to go to high school. You could have, dropped out before high school, but the average man could go and get a job in America and buy a house, buy a car. His wife didn't have to have a job. She could stay at home. He could have 3, 4 kids, right? Support them all. No credit cards. No, buy a car, no loan, pay cash, take vacations, save for his retirement. We had a very, very high standard of living. The envy of the world. I mean, nobody but Americans lived the way Americans did in the 1950s. I mean, now there was a whole expression about ugly Americans because an American, a fireman, would take a vacation in Europe and he thought he was rich because the dollar was so strong. Everything was so cheap for us. But we built this up based on savings and production. You know, we built the economy without an income tax, without a Social Security tax. Yes, we had those things in 1950, but they were new. They didn't really start coming in. The income tax really came in during the Second World War. Social Security tax didn't come in until the 1930s, but it was very low. And it wasn't self-employed people didn't pay the Social Security tax back then. So we had a much, much smaller government. And our prosperity was created during the decades that preceded that. So we could have a much, much higher standard of living if we go back to a free market economy and not this, gigantic bubble that the government continues to inflate.
If we had a high standard of living, though, in the 50s relative to today, I mean, doesn't that imply that there was no sort of, I mean, for me, what I kind of see happening is this concentration of value, right? You've got people who are providing extreme value, for example, in technology, making a lot more money. Isn't that the way it's supposed to work in a free market? That those people providing more value have a higher standard of living, and isn't that actually what we're seeing? I mean, in the 50s, I feel like as an average, the standard of living was lower than it is today.
No, it was higher, much higher. Yeah. Now the thing is, there has been some advancement, technological advancement, right? So we have improvements in technology. But if you compare, let's say, the gains, right, in the standard of living or the way people live from 1950 to today, right, that's about a 70-year time period. If you then contrast that to the advances from 1880 to 1950 and say, where did we see a bigger improvement in living standards? It was 1880 to 1950. I mean, picture somebody in 1880 going in a time machine in 1950. I mean, it would be like a completely different world. I mean, a guy in 1880, he had candles lighting his house. He rode on he went to work on a horse, right? He went to the bathroom in an outhouse, right? They had no appliances. There was no radio, television, airplane. I mean, the people in 1880, they lived pretty much the same way as they did in 1580. There really wasn't much advancement. Then all of a sudden we have the Industrial Revolution, free market capitalism, really unleash, and you go fast forward to 1950 and you got television, you got telephones, you got airplanes, you got cars, you got refrigeration, you got air conditioning, electricity, indoor plumbing. You got all the appliances, refrigerators, washer, dryers. Back in 1880, how did they refrigerate stuff? They didn't. I mean, maybe if it was cold, you could stick it out in the ice. I mean, you did your laundry in the stream. You had people churned butter by hand. I mean, you couldn't go to the store in 1880 and buy a stick of butter. You had to make that stuff. I mean, so.
But is that
what do we have? Let me finish my point. Yeah. What do we have now that we didn't have in 1950? Yeah, I mean, we got the TVs are better, but we had TV back then. The only thing we really have now that we didn't have in 1950 are cell phones, computers. I mean, but the living standard is what I'm talking about. I'm talking about in 1950, a guy without a college degree, without a high school degree, could support a wife and a family without even going into debt. You can't even do that. I mean, today, the average middle-class family has a husband and wife both working full time. Sometimes they have second jobs and they still can't make ends meet. A lot of them can barely afford one kid, let alone four. They're up to their eyeballs in debt. I mean, the standard of living is much, much lower. And in 1950, America was the world's, wealthy country. Our manufacturing dominated the economy. I mean, it was like night and day compared to where we are now. I don't want to, get rid of all the technology that we've accumulated since 1950. But what I do recognize is, had we maintained the same relative level of economic freedom that we had, from 1880 to 1950, if we had maintained that for the last 70 years, we would have so much more technology now than we have. I mean, you wouldn't even recognize America today. Because back in 1950, America had a standard of living that no one in the world could even come close to. I mean, the second place wasn't even close to America. Now there are many countries that have living standards higher than the United States. So, I mean, if we had kept our lead and continued to enjoy the free market capitalism, I mean, who knows what it would be like here.
So, I mean, if we have this stalling of the standard of living, essentially, that you've described, is this an issue of a lack of education, or is this a technology issue? Is it a money issue? Or is it just the government failing to educate folks to, like, hey, this is where you should be working right now, because this is where that single man that you've described from the 50s can still afford that vacation and house for everyone? Is there a reason that's not happening?
Yeah, it's not about the government's failure to do something. It's about the government having already done too much. That is the problem.
Okay.
We need to get the government out of the economy. The government has screwed all this up. Government regulation, government subsidies, government taxation, programs. That is what has stopped the dynamism that existed in the past. That was the key to our prosperity, was free market capitalism. So we don't need any more government. We already have too much government. That is the problem, right? We need to get government out of everything, including education. It's not like we just need more government education. We don't, we need more private sector education, which is much more efficient. The private sector can educate people far more efficiently than the government. They won't have to stay in school nearly as many years. It won't take that long to learn, and it won't cost anywhere near that much money. I mean, that's who handled education initially. Look, get the Constitution. There's nothing in the Constitution about education. Education doesn't appear once in the Constitution. So they had schools back then when they wrote the Constitution. Yes, clearly they did, but they didn't want the government to have anything to do with it.
Got it. And now you're talking about obviously we know you trying to reduce government is a big goal of yours. One of the reasons you're also in Puerto Rico now, but you're also not short the stock market, and you're talking about this collapse of the dollar and how we've got to maybe invest outside the United States. Can you clarify this a little bit? Why not be short the stock market? I mean, if the dollar collapses, aren't we going to have issues in U.S. stocks?
Well, if the dollar collapses, really crashes, well, stocks are going to go up in dollars. I mean, you go back to the hyperinflation in Zimbabwe, right? The Zimbabwe stock market was the strongest or best performing stock market in the world in its own currency. So if I'm going to short U.S. stocks, and let's say U.S. stocks go down by 50%, but the dollar goes down by 90%, U.S. stocks can still go up fourfold in that environment. So I would be a loser. So what I want to do is own the stuff that's going to go up in real terms instead of being short the U.S. stock market. But if the Fed was honest, right, if the Fed was not going to intervene, then yeah, I'd short the stock market. It'd be a great trade. But the problem is, I don't want to fight the Fed. That's an old expression. Don't fight the Fed. I'm not. I'm betting on the Fed. I'm betting the Fed is going to destroy the dollar, because that's what they're doing. All of their policies is designed to destroy the dollar. So I'm just betting that they're going to succeed. And so that's why I own gold. That's why I own foreign stocks. I don't want to fight the Fed. I'm basically riding the wave that the Fed is creating.
Isn't our GDP going to blow up, though, once our economy opens up again here? And isn't growth going to exceed inflation anyway, to the point where we have those real returns and we just continue to see a growth, maybe the growth that we saw between 2011 and 20? I mean, why would we see anything other than what we had between 11 and 20? Why do we have to see this implosion?
Exactly. What we had then was fake, too. We didn't have a real economy. We had consumers spending borrowed money. We had massive deficits under Trump. We had massive deficits under Obama. We had artificially low interest rates, even though the Fed allowed rates to rise a little bit under Trump, they were still artificially low. So we had a bubble economy the entire time. Yes, we're going to go back to that bubble. But the problem is it's so much bigger now. But this is not economic growth that we're having. In fact, we've guaranteed that we are incentivizing people not to work. We are paying people more money not to work than what they would earn if they returned to work. So we're going to have an ever increasing army of people who are going to be dependent on government. Where's the government going to get that money? The Fed's going to print it. And of course, the Biden administration, we're going to have some type of increase in the minimum wage, even if they couldn't cram it through in this $1.9 trillion bill. It's going to come. That's going to permanently put more people out of work, which means they're going to now be dependent on the government, which is dependent on the Fed. But we're going to have more government spending under Biden, more programs, and that does even more damage to the economy. Look, the GDP could go up because all the GDP measures is what we're spending. But but if we're borrowing and printing the money, we're not having an actual increase in our standard of living.
So, I mean, who says it has to stop, though? I mean, can't this keep going for 30 years?
Well, in theory, it could, and it's already been going for 30 years. I mean, you and I could have had this conversation 30 years ago, and you could have said, I could have pointed out all these problems, and you would have said, well, couldn't it keep going for, and it has. But the problem is, eventually, you get to the point where, you can't go anymore, right? It's like, well, how many straws can I put on this camel's back? Well, we'll know when we put the last straw. Right? But until the last straw, you don't really know the answer to that question. So could we have another 30 years? It's possible. Is it likely? Probably not. I mean, if we went on like this for another 30 years, multiply the debt. There's no way. So I don't even think mathematically it's possible. The question is, do we have 3 more years? That might be, a more realistic time frame. Maybe that's the over-under on this thing before the crisis, because I think we're really late in this game.
Kind of like Ray Dalio saying we're in the 9th inning, huh?
Yeah, and there's a lot of people. Look, there's a lot of other very smart people, probably smarter than me. I don't even want to necessarily put myself in the camp of really smart people, but there are some really smart people who are now really starting to say the things that I've been saying. So I might have been saying it earlier, but now a lot of people who were only talking about it as a remote possibility or theorizing about it are now coming out and saying, yeah, this is going to happen. So, the choir of people that are now singing the same song is a lot bigger now than it was.
And now, Biden obviously has these big plans coming up for infrastructure. I know my feeling is you're very anti this government spending. Isn't infrastructure spending and transitioning and incentivizing green a good thing? Isn't that going to create jobs?
No, it'll just destroy jobs. The government is great at creating jobs in the public sector that it can point to. Hey, look, we created these jobs, but the resources to create those jobs has to be appropriated from the private sector. So let's say the government creates 1,000 jobs in the government. But in order to fund those jobs, they destroy 2,000 jobs in the private sector. See, nobody sees the jobs that are destroyed because the government doesn't, take responsibility for those, but it takes credit for the ones that it creates. And there's a big difference between the job that comes about in the private sector and the one that the government creates. The private sector jobs are necessary and productive. And if they weren't, they wouldn't exist, because the employer can only hire people if he can make a profit. And he can only make a profit if he is adding value to the customer. The government can employ people even if they're doing damage, right? The government can employ 100 people digging ditches and then pay another people $100 to fill them back up again, right? No private business could stay in business doing that, right? They'd run out of money and go bankrupt. But the government could do it until the country goes bankrupt, until the taxpayer goes bankrupt. So government jobs are non-productive jobs. The private sector jobs are productive. Back in the old Soviet Union, there was full employment. Everybody had a job. Nobody was unemployed in the Soviet Union. Everybody worked for the government. But if you wanted to buy bread, you had to wait in a 4-hour line or an 8-hour line, right? So what good is it to have a non-productive government job? We want real jobs, because jobs are not a goal. Jobs are a means to an end. What we want is the production that the jobs create. We don't want to work because we want to work. We want to work because of all the stuff that we produce because of the work. So if the government employs people to dig ditches and it employs more people to fill them back up again, the labor was a complete waste. We got nothing from those jobs, right?
Now, Harry Dent thinks the market's going to, like the stock market's going to sell off 90%. You're suggesting that as the dollar collapses, the stock market will actually go up, which is one of the reasons that you're not short the stock market. Can you comment on that?
Yeah, I mean, look, I agree with Harry that the U.S. stock market could go down by 90%. I just disagree with him as to in terms of what. So Harry says the stock market will go down 90% in terms of dollars. And I would say, no, it will go down 90% in terms of gold, right? So yes, so you'll see the loss of value of stocks when you measure them in gold, but you will not see the loss when you measure them in dollars. It's like, because the gold is constant, the dollar is not. It's like if I'm going to measure you and I'm going to measure your height with a ruler that has 12 inches, and let's say you're 6 feet tall, right? Well, you're always going to be 6 feet tall if I measure you with that ruler. But if the government is in charge of the rulers and they keep making them smaller and smaller and smaller, well, if I measure you with a ruler that only has 6 inches in it, well, are you really 12 feet tall? No, because you haven't changed in height. I just got a smaller ruler. So this is what's happening. If we keep making the dollar smaller, the stock market's going to look bigger and bigger and bigger. But gold is constant. And so when I measure the stock market in terms of gold, then I'll see the real value.
Got it. And so if we had to rank what you think is, and I want to talk about the Elon Musk tweets here, but if we had to rank sort of things on a BS scale, it kind of sounds like you're suggesting gold is the least BS. Then you got the dollar, and then you got Bitcoin as the most BS. Is that what you're suggesting?
I don't think gold is BS at all. I mean, gold is gold.
Okay, so that's zero.
Elon Musk, the whole Elon Musk, exchange, which ended up with me getting an eggplant, right? But Musk tweeted
I gotta
out,
clip that one, man.
yeah. So Musk tweeted out that Bitcoin was almost as BS as fiat.
Yeah.
And so I read that and I say, aha, so at least he knows they're both BS. He just thinks that fiat is more BS than Bitcoin. I disagree. I think Bitcoin is more BS than fiat. And so I pointed that out. And then he sends a tweet where he tries to explain to me why Bitcoin is a superior money to gold. And I addressed his tweet. I sent like 3 or 4 replies. I think I really nailed the replies. People can look at them. And I explained why Musk's understanding of money was wrong, which proves that, you can have money and not understand it, because Musk has more money than any of us. At least he did until this week. But he has more money than just about all of us, but he doesn't necessarily understand it, which is fine. I mean, he's an engineer. He's not an economist. But I tried to educate him. I mean, I don't pretend to be smarter than Musk. He's probably got a much higher IQ than I do. But, Einstein, I think, was a socialist too. I mean, you could be a brilliant man, but it depends on what you're spending your time on. I'm sure if Einstein studied economics long enough, he would have been a free market Austrian economist like me, but he didn't. He was more into, mathematics and physics or whatever he was doing. And so he didn't pursue that. But I think I did a good job of explaining to Musk where he was wrong in his tweet, in his comparison. But anyway, Musk ignored all those tweets. Then a couple of days later, I happened to tweet out just to point out that, hey, Tesla's now in a bear market. And it's only been about a week since he announced that he has Bitcoin. And a week later, the stock's in a bear market. And almost the entire decline happened after the announcement that they had Bitcoin, even with Bitcoin going up. So he spent 1.5 billion of shareholder money on Bitcoin. He bought the Bitcoin at about 35,000, and now it's over 50,000. there's all these articles about how Tesla has made more money on its Bitcoin than selling cars, which is, is a bigger problem in and of itself for a car company. But of course, it hasn't really made any money on Bitcoin because it haven't sold it yet. Putting 1.5 billion in is a lot different than taking 1.5 billion out when you have a thin market. But I just pointed out, hey, this is a quick bear market, even with Bitcoin going up. And so I said, hey, you got Michael Saylor out there from MicroStrategy, and everybody is saying that, Elon Musk is just going to start a trend, and now all these CEOs are going to put Bitcoin on their balance sheet. And my point was, wait a minute, Tesla puts Bitcoin on the balance sheet, and a week later the stock's in a bear market. I don't know. I mean, are a lot of other CEOs going to want to do that now? I mean, it seems to me that it's not an example that other CEOs are going to want to follow, given the way the market has reacted to Tesla buying Bitcoin. The shareholders have voted and they've dumped the stock. So I put out this tweet to point this out. And I guess that irritated Elon a bit, or Mr. Musk. But anyway, so then he replied to my tweet with an eggplant, which is a very phallic looking vegetable. And so, basically that was it. I mean, he was flipping me off, or, he was like, but, I had a valid concern. I mean, I'm not a Tesla shareholder, so it's not as big a deal to me. But I mean, what if there's some Tesla shareholders that like, we don't actually approve of you buying Bitcoin with our cash.
Oh, yeah.
We bought Tesla because we wanted to buy an automobile company. If we wanted to buy Bitcoin, we would have bought Bitcoin. I didn't send my money into Tesla for you to use it to buy Bitcoin. And so, I think that attitude is very, very flippant of Musk to not consider the fact that not all of his shareholders, are Bitcoin hodlers. And even the ones that are, you would think they'd want diversification. If I want Bitcoin, I'll buy Bitcoin. If I want Tesla, I'll buy Tesla. Don't now marry the two together. So now when I buy Tesla, I'm also getting Bitcoin. I mean, why muddy those waters?
Well, I think the argument for muddying the waters is essentially it's a fight against fiat, right? You've got this inflationary currency, essentially, this currency that continues to expand its money supply, where you have Bitcoin that by its nature is deflationary. So maybe if we set aside the, the only thing Bitcoin might have is the belief that it has value, right? I can't actually take Bitcoin and, like you mentioned, use it for salt or coffee or whatever. Going back to the previous part of our discussion here, I mean, aren't they right though, in some sense that, hey, why not park this extra money that you have and put it into something that's not going to get basically inflated away?
But you don't know that it's not going to crash. Look, what if Musk was really worried about inflation, right? What they should do is start building up their inventory of the commodities that they need to buy, like copper, like nickel, things that they need in these electric cars. Instead of keeping all the cash, keep it in the good commodities that you're going to need, or buy, invest in ETFs, or of that, or in a way gold. If you realize that there is some kind of relationship between gold, and by the way, silver is used in the automobiles. So buy some silver. I mean, actually buy the things that you're going to need as a hedge right now. It makes no sense to gamble on Bitcoin, especially the way Michael Saylor talks about it. Like, well, inflation could be 2 or 3% a year. So I'm going to buy something that can lose 2 or 3% in a minute. I mean, look at how much. What if I was worried about inflation and I bought Bitcoin last week at 58,000, and a week later it's at 48,000? I mean, I was worried about 2% inflation. I just lost 10-15% of my money over. I mean, it's not stable. Now you could say, oh, gold would have gone down too. Yes, gold is down too, just not nearly as much and as quickly as Bitcoin. But there's nothing that says that Bitcoin won't be at zero. I mean, gold's never going to be at zero. It's never been at zero, and there's no way that it could be at zero, because there's too many people who need gold who would buy it long before the price ever got down there. But yeah, I mean, so if all these companies were really worried about the dollar, they have other things they could do with their cash. They can diversify into other currencies that they think are more stable. They can diversify into gold or silver, which they could use as money. They can build up their inventory. I mentioned Starbucks earlier. They could just buy a bunch of coffee Hey, we know we're going to need coffee. Let's just lock up a lot of coffee contracts, right? Airlines, let's just start buying fuel. We don't want to hold cash. The other thing they could do, obviously, is pay out dividends. Hey, we're not going to hold a bunch of cash because it's losing value. Here, we're going to send it out to our shareholders. Do something with it. We don't want to just hold it here for you. They could obviously use it to buy back their stock, which is typically what they do too. If they say, well, we'll just buy back stock. But I mean, taking the cash and saying, oh, because there's inflation, we're going to gamble on Bitcoin.
Right.
That makes no sense whatsoever. And, people who don't think it's gambling. I mean, I was on Fox Business the other day, and, we had the same argument. I said, I don't think a company should be gambling on Bitcoin. And he said, it's not gambling. So, well, of course it's gambling. I mean, you're betting that the price goes up. Isn't that a gamble? I mean, there's no guarantee that it's going to go up. It could just as easily crash. Anybody who's buying Bitcoin is gambling on the price. You're gambling that people are going to want to buy Bitcoin in the future. They may not. It's a bet, and it's a very risky bet. Now, just because the bet has paid off in the past, they always want to point to how much it's gone up. Yes, it has gone up a lot in the past, but that doesn't mean it can't come crashing down. Just because it went up before it crashes, you can look at every mania. Everything goes up before it comes down. The fact that it goes up doesn't mean anything. Yeah.
You're arguing that Bitcoin is volatile, therefore it's a gamble. But ETFs can go up or down as well. And there's no guarantee that gold goes up. I mean, maybe tomorrow Harvard releases a study that says gold causes cancer, and all of a sudden gold gets axed, right? And inventories at Tesla, if they increase inventories at Tesla, and that's very inconvenient. You're going back to the system of barter, basically, by storing product. And so you're arguing Bitcoin is bad because it's volatile.
Yeah, they're
but
just
does
holding
volatility
inventory.
equal risk?
Well, volatility is risk by definition. That's how risk is a measure of volatility. But the problem with Bitcoin is not simply that it's volatile, because you're right. I mean, everything has some degree of volatility, right? Bitcoin has a lot more volatility than most other things. So Bitcoin is much more volatile than gold. But yes, gold has volatility too. Gold is less volatile than the stock market. It's less volatile than a lot of other commodities that are subject to much greater fluctuations. But my problem with Bitcoin as a store of value isn't its volatility. Its volatility is what makes it problematic to use as a medium of exchange, and as a unit of account. The problem with it being a store of value has got nothing to do with the volatility. It's got to do with the fact that it has no value. So that is the risk. When you're gambling on Bitcoin, you are inherently buying something with no value, betting that people will value it in the future and want to buy it. I'm not making that leap of faith with gold. Gold's been around for 5,000 years. People have always been using gold. So it's not a crazy speculation for me to assume that people are still going to want gold in the future, right? I mean, they've always wanted it in human recorded history. I mean, gold has properties that no other metal can replicate as good. So there are all these demands. I mean, one of the reasons that gold isn't used more often is because it's too expensive. And so we substitute other metals that are cheaper, that aren't as good, but they're good enough given the cost. But in certain areas where you need the absolute best, then you pay for gold, even though it's more expensive. In certain applications, you need that enhanced quality. So as the price of gold comes down, people will start using gold that weren't using it before. And so the uses will grow as the price goes down. And there's going to be some kind of natural floor to stop gold from falling. I mean, and you can look historically and you can see, well, what is the price of gold relative to the price of copper? What is the price of gold relative to a barrel of oil? And if it gets too out of whack, well, people that have those commodities will switch them for gold. I mean, so you have this stuff that you have going for you. Bitcoin is a blind leap of faith. I mean, yes, you have the last 10 years of the price going up, but you have the price going up based 100% on faith and nothing else. And also the faith that nothing is going to come around that people value more than Bitcoin, because Bitcoin is just a digital currency. There is no limit to the number of digital currencies that can be created. I mean, right now, there's, I don't know, 6,000 of them or 8, I forget how many. Look, Elon Musk keeps tweeting about Dogecoin. Who's to say that Dogecoin, which started as a joke, maybe Dogecoin replaces Bitcoin? I mean, he keeps saying it's the crypto of the people. I mean, why is Dogecoin worse than Bitcoin? In fact, it's probably better than Bitcoin. It probably improved on Bitcoin. But of course, somebody can come along with a whole new cryptocurrency that's better than both, and then you don't even know about the science. I mean, we think that Bitcoin is unhackable, right? People keep telling me, Peter, one day we're going to be mining for gold in outer space, and they're going to have gold in asteroids, and so we're going to have all this supply. Well, maybe. I mean, my guess would be that gold is pretty rare in the galaxy. And so, if it's rare on Earth, it's probably rare everywhere. I don't know, but it's, but we're going to need more gold in the future because we're probably going to have all sorts of new uses. In fact, if we have spaceships, we're probably going to be putting a lot of gold in them to make them operate efficiently. I don't know. But long before we're mining gold on asteroids, we'll have computers that can hack Bitcoin. I mean, I think they may, quantum computing, whatever, they may look back at it and look at this like, oh, this code, the blockchain, oh, that's, child's play. I mean, how do we know? Because all you're betting on is this computer network, which, by the way, it's extremely expensive to operate the Bitcoin network. Lots of energy is used. People keep talking about, well, gold is expensive to mine. To mine it, yes, but once I have an ounce of gold and I put it in my wallet or in my vault, there's no energy that's required to give that gold value. The only thing that gives Bitcoin value is the network that exists, so you can transact it, you can exchange it, and that costs a fortune to maintain based on all the electricity that is used to power it.
Yeah, it is interesting, though, that over the past years, energy usage has almost really been flat as sort of Bitcoin mining becomes more efficient. I think the supercomputer risk is valid, but I want to go back for a moment and just unpackage something you mentioned. You mentioned that risk is a measure of volatility. To me, I've always looked at risk as a chance of going bankrupt, of going bust. That volatility is just a fluctuation in really people's moods and desire to pay for something. So is it not possible that Bitcoin is an investment? Maybe it's not a medium of exchange. Maybe Bitcoin is just an investment for Tesla. And in theory, I mean, gold only goes up because people pay more for it. Sure, there's some enhanced properties of gold, but look, I mean, as technology advances, we could find substitutes, and maybe we don't need gold and semiconductors and chips anymore. Yeah. So, who cares that there's this faith in Bitcoin? Isn't it an okay investment then?
Well, first of all, when it comes to risk, I mean, there are different meanings of risk in different circumstances. And when I go outside, I risk getting hit by a car, and that's a risk. But when it comes to portfolio analysis, risk is volatility. I mean, that's basically what it is. And so that's just how everybody looks at it. But when it comes to Bitcoin, Bitcoin is not an investment, right? Buying gold is not an investment either, right? Gold is a commodity. And, you can buy a commodity to speculate in it, if you think, in the short run, or you can hold it as a store of value if it's capable of storing value, like gold is. But an investment is something that throws off a return, right? So I can loan my gold to somebody and they can pay me interest. And that would be a way to invest my gold, where I loaned it to somebody and they're going to pay me back more gold than I loaned them, right? It's a note, a bond. But making a loan, right, bond, it is an investment. I can buy real estate because I can rent it out, and it's an investment. I mean, if I buy it for myself, it's not really an investment, but I can still use it. If I buy property to use personally, I get the benefit of using the property, and maybe I don't have to rent something, so it could throw off a return in that I don't have to pay rent anymore because now I own a house, and so it's an investment in not paying rent. But now I have other costs that I may own as a homeowner that may exceed the rent. But rental property is clearly an investment. I collect rent. Stocks are an investment because stocks pay dividends. And even growth stocks, and we talked about that at the beginning of the show, growth stocks may not pay dividends today, but what you're buying is the present value of their future dividends. They're investing their income now to grow the business so that in the future they can pay even greater dividends than they're paying now. And a lot of the stocks that don't use their income to pay dividends use their income to buy back stock, and so they return the investors through that, and so that makes it an investment. But if something does not throw off any income, you're not making an investment. Now, you can buy raw land, right? Let's say I buy raw land. I'm a speculator in land. That's not an investment. If I just buy raw land, I'm a land speculator. If I buy land that's already been developed and has income, then I'm a real estate investor. Now, you can be a land speculator and you can make money. I can buy some land and then it can go up and I can sell it at a profit. I made money speculating in land. So if you're buying Bitcoin, it's not an investment because it doesn't have a return. It's not a commodity because it doesn't have a use. It is a speculation. Bitcoin is a digital token that people collect and people trade. And so what Tesla is doing is speculating on that token going up in price. And I just don't think that companies should be gambling with shareholder money. That's not their function. Return the money to the shareholders. If you don't need it, then give it to the shareholders in a dividend and let them gamble with it if that's what they want to do with it.
Got it. I could see that. I think a lot of people would agree. There's definitely an element of speculation.
It's all speculation. It's not an element. It's 100%.
Something I would ask you, though, that I think might be a little bit even more speculative than Bitcoin, even though I think you think Bitcoin is the ultimate form of speculation, I got to ask you about this. This is something that's become more popular since we last talked. Non-fungible tokens and investing in digital art. Did you hear what happened with Logan Paul?
Well, I know he's moving to Puerto Rico, so apparently he's going to be my new neighbor. But I know he's got a fight scheduled, right? That I don't know if it's going to be a fight.
So you got to hear this.
He's just going to get beat up. But I think that's happening next week. But I didn't hear about any kind of art. There's a lot of artists.
So listen to this. Logan Paul created basically a digital trading card of maybe a version of himself, like an online piece of art of himself. So here's this, rather than have a Pokemon card in your hand, there's this digital card of Logan Paul that exists. He sold ownership rights in that digital card of himself and made over $3 million selling rights to this digital card himself in less than a day. Through this,
is it like a limited edition though? They said there's a certain number that.
Well, there's only one, right? But it doesn't exist. It's just digital, right?
Right, but how many people can buy it? How many people can buy the same thing?
Yeah, there's a limit to how many shares you could have of it. Whether it was like 3,000 or something like that, people can buy it or something like that. And so he sold a ton of these. I mean, in theory, he could just keep creating more and more of this art. But what they're doing is they're turning this art into a non-fungible token and then selling shares of it. And so people are buying a share of this Logan Paul card, speculating that in the future, somebody else is going to want this first edition digital card from Logan Paul. In my opinion.
Yeah, it sounds like they did these crypto kitties. I remember that. I don't know if they're still around. Yeah. But look, I mean, to the extent that you can create a market for your art and you can limit the supply, but I wouldn't imagine, if there's that these things will ever really be a big collector item. Like, some of these paintings are, from, the old masters, the impressionists, or there's all these, paintings where you can get $100 million for a painting.
Picasso.
These things are never going to be truly scarce in the mind of a collector. I don't think. I can't see somebody having a collection of Logan Paul digital images and feeling like some real pride of ownership, like you would get, hanging that Picasso on your wall and knowing, hey, I've got a Pablo Picasso. The guy himself painted this, and I've got the canvas that he actually painted. And there's only like one in the world of this particular original, and there's only X number of original Picassos, and I own this one. And there's always going to be a demand, I think, for that. I think because rich people are always going to need places to put their wealth, and there's a lot of pride that comes with a Picasso. Because after all, once you've bought all the things that money can buy, what else are you going to get? I mean, how many yachts do you need? So
Bitcoin.
you got all, yeah, well, who's going to have, I don't think anyone's going to have a lot of pride taking people, bringing their friends over to admire their Bitcoin, as opposed to, my Picasso, and the joy of, collecting art and accumulating a collection of art versus a collection of cryptocurrencies. But look, I mean, obviously this kid is making a lot of money. I don't know to the extent that what he's selling, if it's going to be a problem with any kind of regulators. I mean, how they would look at this. Is it a security? Right. Are they unregistered? I don't know. I mean, this guy might have opened up a big can of worms. So I don't know how he's selling it, or maybe he's doing it completely legit. But to me, it sounds like the guy that's going to make all the money is Logan Paul. Now there may be some other people that get in and out of his digital art and make a profit, but it will come at the expense of the other people who suffer a loss. But it could be a gravy train for him if he can keep on issuing more and more. But of course, the more supply he floods the market, the less it's going to be worth. So he'd have to really, he'd have to just do it once in a while if he wants to kind of maintain, the supposed value. But I mean, if it's a digital artwork, though, is there anything that stops me from copying it so a friend can have it, even though it wouldn't be the original? He would still be able to look at it. I don't know. I mean,
yeah, that confuses me a bit too. I believe it's the sort of the bragging rights of having a share of the actual unique thing.
Oh, so it's a share. He made one card and everybody owns a fraction of it. Now I get it.
Yeah.
But you own a fraction of what? You own a fraction of nothing, because how is he? I mean, what are they going to end up selling it? So he's tokenizing the card and letting everybody own a piece of it. I think you can do that with any asset, right? Any asset.
Yes.
I can say, hey, I own a house, and now I'm going to tokenize my house, and everybody can buy a thousandth of it. But I mean, what does that ownership really mean if you have no right to use the house? It's like let's say I tokenize my own house and I kept 51% of the house and I sold the rights to the other 49%. I mean, I have control. I live in the house. I don't charge myself any rent, and I'm going to sell these tokens and I'm going to collect all this money. And now you own a share of a house that you can't use and you can't rent. It's like,
Yeah, that's a good point. Yeah, I think that you mentioned something as well that made me very concerned about this NFT space, non-fungible tokens. One of the things that people say is, well, but the thing is that first thing he made is unique. And my counter argument has been, but he could just make more of those. And sure, they'll be slightly different, but it kind of dilutes the amount of people who have money to keep buying these NFTs. How can value be sustained when every creator goes out there and says, here's the Meet Kevin card, here's the, I don't know, Jake Paul card? Like, there's only so much money that can go into these. How are these going to go up in value? Is this like a disaster waiting to happen?
Well, of course. I mean, because you're actually buying nothing. If they look, I mean, obviously, like a stock, you're buying shares of a stock. So if you were tokenizing something that had income, let's say I had an income producing asset and I sold tokens, and your token entitled you to your share of the income, and every quarter I sent you a check, and then if you sold that token, whoever bought it from you would be entitled to that income stream. Okay, then that token has a value, right? And the government would probably consider it a security if somebody was operating an asset. And so it have to be registered. And unfortunately, I don't like that. I wish there were no security laws. I don't agree with having an SEC and all these laws. I wish we didn't have them. But unfortunately, we do. But I mean, there are certain things I think could be tokenized where the tokens could have real value. But if I'm just going to, paint a picture and say, hey, here's this picture, you could buy a 1,000th of this digital image that I just created. I mean, what value is that? It's nothing. But yes, if people want to buy it, it can go up in price, and until somebody doesn't want to buy it anymore. And then somebody gets left holding the bag when it comes crashing in price. But if Logan Paul makes money doing this, everybody's going to want to do it. Every celebrity is going to come out who has a social media presence. Hey, here's my new card. Buy into it. But the government's going to have a field day because people are going to lose a lot of money, and then the government's going to come in after the fact with all kinds of new regulation. That's the problem. Whenever people lose money, the government seizes that as an opportunity to have more regulation, which basically just sets people up for even greater losses in the future.
Wow. So, one of my last questions that I have is Charlie Munger, famous student of Benjamin Graham and, associate obviously with Warren Buffett. Munger recently slammed Bitcoin and Tesla, trying to figure out which one's more overvalued. And at the same time, you've got a Buffett investing not in gold because he doesn't like investing in gold, but investing in miners. Can you talk to what's going on? What's going on with Charlie Munger? Is he right about Tesla, Bitcoin? Is Buffett right to be investing in miners? Can you talk to them a little bit?
Well, first of all, Buffett made an investment, at least Berkshire Hathaway did, in Barrick Gold. And then when the investment became public, I think he kind of was embarrassed by it, and they ended up selling the investment. Now, of course, it's gone down, so maybe they just did it as a trade, and I think they made money. But that's not typically what Buffett does. He doesn't trade; he kind of buys and holds. So I think that the perception that he was making a bet against America because he's so bullish on America. I think that he ended up getting out of Barrick. But as far as Buffett and Munger, look, they've been negative about Bitcoin from the beginning, and a lot of people say, well, Buffett is negative on gold and Bitcoin, so what difference does it make? I mean, I think that Buffett understands what gold is. And if Buffett really believed that there was going to be massive inflation, he would want to own gold or silver. He would not want to own Bitcoin. I mean, I've read enough of his writing to know that he understands what inflation is. I've seen him describe inflation as a tax, from central banks, and he knows that inflation is printing money. He just prefers to hedge against inflation by owning stocks, owning businesses. And that's a good way to hedge against normal inflation. But if you get really high inflation or hyperinflation, then you need something like gold. And I think Buffett would agree. But as far as what's riskier or what's more overvalued, Tesla or Bitcoin, I think it's clear. I think Bitcoin has no value. I think Tesla has some value. I just don't know what it is. Right? I don't think Tesla is worthless. I think that he has some innovative products and he has a loyal customer base. And I don't think Tesla is going to go away. I think Tesla is going to own a share of the automobile market. I mean, it's possible that they go bankrupt one day, and I don't, but I think it's more likely that Tesla finds a niche, and it's there, and maybe one day it will be acquired by a larger company. I mean, obviously not now because it's so overpriced, but I don't know what the value is. It seems like if you look at the price of Tesla, the market says that one day Tesla is going to sell half the cars in the world. That's basically what you're betting, that it's going to be as big as all the other automobile companies combined, and everybody's going to buy electric cars. I mean, because and no one's going to buy gas cars. We're all going to be electric, and half those cars are going to be Teslas. I just find that incredibly hard to believe that that's going to be the case. You have all these big automobile companies all over the world. In Japan and Germany and in Korea, India, making cars, and they're all starting to make electric cars.
Right.
Now, what if some of them are better than Teslas? What if they're cheaper than Teslas? I mean, just because Musk was really the first guy to really popularize it. Of course, those aren't the first electric cars, but to say that he's going to maintain this dominance is ridiculous, because no industry can maintain that dominance. There's no history of it ever happening. You have a lot of competition, and Musk's going to have competition, and it's going to get more and more intense as the demand for electric vehicles grows. So we'll see. I mean, what Tesla is really worth. But there were a lot of smart people who shorted Tesla a long time ago because they crunched the numbers and they were like, there's no way the company can be worth this much. And then it doubled and doubled again. And a lot of those people were forced to, just throw in the towel because they couldn't take the heat Meanwhile, everybody believes that the little guy, because it was the big institutions, right? The smart guys that were shorting the stock. It was all the little investors who don't know anything about portfolio analysis, who don't know how to look at a balance sheet. They just saw Musk's personality, or they owned a Tesla and they liked it, and they just started buying. And then as the price was going up, they all thought they were geniuses and they bought more, and then more people bought it. You have everybody buying it. And now you have a lot of people trying to say that this is a case where the little guy was right and the big guy and the institutions were wrong. No, the little guy is wrong. They just don't know it yet. The institutions were right. They were just early. Now, their timing was wrong. Obviously, with the benefit of hindsight, they shorted Tesla too soon. But ultimately, the price is going to crash. And the people who stayed short Tesla are going to make money. But the people who stayed long and who continue to buy more shares at ever inflated prices, they're going to lose a lot of money.
So you're saying I shouldn't buy Tesla tomorrow. Got it. Or Monday.
And that doesn't mean it won't go up the day after. But look, Tesla's now in a bear market, right? Tesla's down more than 20% from its peak. So we're in a bear market.
Buy the dip, man.
And, we don't know how big the bear market's going to be. It could be a long bear market, could go on for years. The stock can go down 80, 90%, or it can be a short one and bet Tesla can make new highs. I don't know.
On this, this brings up something weird that I think happened this last week. Biden and his administration have suggested that they want to go EV. They want electric vehicles, and they want to, electrify the entire fleet. Why do you think the government gave a contract for the Postal Service vehicles to Oshkosh, who's not committing to all EV? And they're saying, we're just going to do fuel-efficient gas vehicles, and maybe we'll do some battery electric vehicles, and Workhorse gets screwed because people thought, here's an all-EV company that's going to get the contract, and they did. Why would the government send such mixed signals? Is this just another example of the failure of government?
Well, I'm sure there was a reason for that. I mean, maybe there were certain political contributions that were made to certain candidates. I'm sure that the company found some way of bribing the government into getting that contract because nothing is fair and above board when it comes to government.
Ouch.
But a part of the problem, too, is that the Biden administration wants all of the electric vehicles to be manufactured in America. He wants the vehicles to have American parts, which guarantees that they're going to be far more expensive. So it's going to cost the U.S. taxpayer a lot more money to do this than it would have cost the taxpayer had they been able to shop around for the best bargain. That's not what the government is about. It's not about getting bargains. It's about dramatically overpaying. And so that's why you want the government to do as little as possible. It'd be better if we just privatize the post office and get the government out of the mail delivery business. I mean, there's no reason. I mean, we had a post office because it's actually in the Constitution. It's one of the few things that the government has the authority to do. But what it doesn't have the authority to do is maintain a postal monopoly and put people out of business who want to compete with the post office. They never should have been doing that, and they still do that. But I think given the change in technology, there is no real reason that the government should be delivering the mail anymore. So I think the post office should be shut down, and the private sector should be able to come in and fill the void that would be left in the post office, and then let private industry buy the electric vehicles to deliver the mail if that's what they want to do. But the government should be completely out of the post office.
I mean, you've got over 600,000 people that work for the USPS. Are you saying, sorry, shutting the doors? Does that carry any weight?
Well, look, they're working there. Again, what if there were 300,000 people digging ditches and 300,000 people filling them back up again? I mean, do we want to keep them employed in that capacity? I mean, I think that the Postal Service could probably fire 90% of those workers and still get the job done. So most of them are probably just, in the way. We don't need them. Now, that doesn't mean those people would be idle. If they weren't working for government, they'd be free to do something else. And it's the something else that I want them to do. I want people employed productively. And if the government got out of the way and we had a free market economy, there'd be so many other employment opportunities because there is no limit. I mean, do you have all the things that you want?
personally, like, do I want more things? In other words, I mean, sure, I'd go get a job, and I'd go.
No.
You know,
But there is human needs are unlimited.
sure.
And so
Yeah.
in a capitalist society, people want to make a profit. And so they try to satisfy human needs. But since needs are unlimited, there is no end to the process. And since people always want more stuff, there's always going to be jobs to help produce that stuff. The problem is when the government intervenes, we don't use our labor resources efficiently. And so we're all poorer as a result. We want to utilize labor, which is a resource, as efficiently as possible, which means we want as few people employed by the government and as many people employed by the private sector. As I said earlier, in the Soviet Union, everybody had a government job, but nobody had any bread, right? I don't want jobs. I want the bread and all kinds of other things that people that work in the private sector produce.
That's a good line. Okay, 2 final questions.
Good, because I ran out of water. I don't know if Paul is listening. He can bring me another one because I'm sitting here and I guess I'm still trying to get over this cold and I need water. Yeah.
SPACs. Are you buying any?
Well, I have not gotten in them, and my thinking is, and if you don't know what these special opportunity funds are, I mean, you're just buying a pig in a poke, right? You're giving someone a blank check. Hey, here's my money. Go out and buy something. Right. And the problem is they end up overpaying. They just look for something to shove into the SPAC. But right now, everybody wants to get in. Everybody and his brother's got a SPAC. And this is all part of the bubble. So what I think is going to happen is after all these SPACs crash, then you can kind of sift through the wreckage and figure out, hey, which one of these SPACs actually bought viable companies? And then you can buy them at that point, right? Thanks. He is watching. So,
all right. Then I got one more here.
Yeah.
There's talk that Robinhood might go public in March. Would you invest in Robinhood as a way to hedge?
Well, first of all, probably not, but because I guess it's probably going to be way overpriced. I don't know if Robinhood actually has any earnings. My guess would be maybe not. And I'm sure the PE or the valuation that would have it would be enormous. I mean, IPOs are very different today than they used to be. I mean, if you go back, to the 1970s, 1980s, and 1990s, the whole point of going public was you had a business that was a success, and you could tell it was a success because it made a good profit, right? And you proved out that your business worked, but you just wanted to scale it up and say, hey, I've got this great little business. It's making all this money. But if I had more money, I could scale this thing, right? Like, let's say I have a restaurant and maybe I opened up a dozen restaurants and they're killing it. Everybody loves these restaurants. I got a whole new type of food and everybody loves them. And I'm like, you know what? I got 10. What if I had 100? What if I had 1,000? Right? I mean, if I'm making so much money on these, but where am I going to get the money? I'm a small guy. I have 10 restaurants. I'm gonna go public, right? So I'm gonna take my proven business model, right? That's making all this money, and then I'm going to get more money from investors, so I can grow my business, scale it up, and these investors will be able to participate in the growth, right? So you needed the money to expand a profitable business, right? And take it, bigger, nationally. You have a local business, you want to expand nationally. Here's how the IPO market is today. I raise a bunch of money from venture capitalists to build out a business that doesn't make any money, but is already huge. It's already nationwide or it's global, right? So I've got this business that loses money and the losses are financed by these venture capitalists. Right. And maybe I've been operating the business for 5 or 10 years and I still haven't made a nickel in profits. But the business is huge. Right. It's got a multi-billion-dollar valuation. And I haven't even gone public. And then the IPO is basically the way the early investors cash out. They don't need the money. When these companies are going public, they don't need the money to expand the business. They've already maxed it out. They've got the revenue as high as they're going to go. They're just looking for a payday. That's their exit strategy. So at now, when you buy into an IPO, you're the potential bag holder that's letting all these guys who got in early get out. Meanwhile, they didn't even prove that the business model worked. You're buying it before it's ever even made a profit. So how do you know that it ever will make a profit if it didn't make one before you got in? So IPOs used to be a real good way for investors to get in on the ground floor of growing businesses that had already proven that they work, right? And now they're just going to try to, take it on the road and, and see if it works bigger, right? Maybe it does, maybe it doesn't, but at least you're betting on a proven commodity and you're hoping the management team can take it to the next level. And the money was used not as an exit strategy. All the new money that came in stayed in the corporate treasurers to grow the business. Now, when these companies go public, it's the VCs that are cashing out. They're just putting the money in their pocket. So it's now just a casino. You're coming late to the party. You're overpaying. So most of these IPOs, you should just ignore them. And in fact, most of the IPOs that have been done in the last couple of years, look at where they're trading. Even though they have a big pop on the first day and everybody's excited, when the dust settles, these things go down, right? And the only people that make money, maybe the people that are lucky enough to get them on the IPO because they've got a connection at the brokerage firm or they're a friend of family or something, and they got the stock and they sell it on the first day and they flip it and they get right out, right? So the whole thing, Wall Street has completely corrupted the whole thing. But at the root of it is the Fed. It's all this cheap money. It's all this money printing. If the government hadn't corrupted the whole process, it would probably still be today the way it was in the past.
Golly. Well, Peter, this was extremely insightful. How can people get in touch with you if they like what you're sharing or they want to learn more? Maybe they're skeptical, they want to learn more from you. What's the best way to do that?
Well, certainly listen to my own podcasts. I do 2 or 3 of them a week, schiffradio.com or on my YouTube channel, Schiff Report. So do that. Follow me on social media. I just went over 400,000 Twitter followers. A little help from Elon Musk. So I got, so I'm there, YouTube, Instagram. I just recently started using that one. So it's just Peter Schiff on that, Facebook. So, just follow me because I post interesting things, related to the economy and to the markets. But for people who want to take it to another level, that actually want to, incorporate my investment strategies into their own portfolio, they can work with my firm and work with me as an asset manager, money manager. I have 5 mutual funds that actually are available at most discount brokerage firms. You can't buy them on Robinhood because they don't have any mutual funds. But, Schwab, Fidelity, E-Trade, Ameritrade, TD, all these companies, you can go and look at the Europe Pacific funds. The website is here above my shoulder. You kind of can't see it now, but that's the website for my asset management company.
There you go.
Which is, for the mutual funds. So you can read up on my funds. You can actually buy the funds directly on that website if you don't already have a brokerage account set up. I think the minimum is $2,500 per fund. But if you have larger sums of money, you want to work directly with me, we can have a separately managed account. I manage portfolios of individual stocks. I manage portfolios of my mutual funds and what I call a wrap account. Most people, won't talk to me directly. I have relationship managers, brokers that work for me. So if you contact my company by phone or by email, you're going to speak to somebody else who can help explain the strategies, help you figure out which is the best for you, if the strategies are even suitable for your risk tolerance or where you are in life and what your goals are. But they'll do all that and help set up an account. But I end up managing it. I have a team of portfolio managers that live with me here in Puerto Rico. And it doesn't matter which one of my representatives, which live all around the country, and some of them live here in Puerto Rico, but whoever you're speaking with, we're managing the money. We're doing it from here. We're implementing these strategies, which are all designed to get out of the US dollar, to get out of harm's way, to not invest in the bubbles, but invest in real value in countries where the monetary and fiscal policy is not nearly as crazy as it is here. And so we have more viable economies. We're getting better deals on our companies, and we have a real hedge against inflation and a weak dollar.
Why don't you create like an ETF, the Schiff ETF or whatever?
Yeah, I could do that too. I have mutual funds right now, but ETFs, ETFs are generally static. Although I know some people have toyed around with managed
Active.
ETFs where they're active. Yeah. And I haven't done that. I mean, is it possible that I could do something like that in the future? I could. I mean, I've just been doing the mutual fund format, and so far that's worked. But yeah, it's not outside the possibility that one day I may launch some kind of active ETFs. I mean, there's plenty of passive ETFs out there.
You have to be registered either way, right? With mutual fund or ETF, or is there like another level of SEC registration?
Well, it'd have to be registered with the SEC. But if I had an ETF, you could buy, smaller increments at any brokerage firm, right? If I had an ETF, you could buy it at Robinhood.
Sure.
But yeah, I mean, I don't know. That's a business decision, and I don't know. Maybe I'll move in that direction at some point. I know people have contacted me wanting to license my name or use it for ETFs, and thus far I haven't taken anybody up on that.
What's next? The Schiff Hotel?
Well, if I have a hotel, it's going to be a real one, not a virtual one. Although I don't know, those are tough businesses right now. Anything that hotel, restaurants, and travel related, those are tough businesses right now. I mean, the business that I'm doing, is easy to do from your home. So,
wow,
Peter, we haven't
amazing.
been hurt by COVID. Yeah.
Well, thank you so much for your time. This was.
I can't believe I stayed on so long. It's been 2 hours.
Hey, you know what? Thank you, first of all. And I have to say, look, there are always going to be people who don't agree with your perspectives. But I think it's always good to listen to different perspectives and see what a counter argument is. So thank you for sharing that. That's awesome.
All right. Yeah. Well, thanks for giving me an opportunity to converse with your audience. I know you've got a pretty good following on YouTube. Congratulations on that. And Paul, who brought me the water, every time I go into his office, he's got you on. So he's watching a lot of your content.
Well, thanks, man.
He's pretty particular too. So if he's watching your stuff, it's because it's good. So.
Oh, I appreciate that. Well, thank you so much. As usual, anybody watching, don't sue me. Don't sue Peter. Always just sharing information here. Thank you so much, Peter. I feel better. I know you're overcoming. You're under the weather a little bit here, and we'll see you again in the future. I hope the market doesn't crash. I hope the dollar doesn't crash, because I think there's going to be a lot of pain, but we got to keep an eye out for it. Thank you.
Well, pain now is better than pain later, I think, because I think it'll be worse if it happens later. So peel off the Band-Aid, get it over with, and let's start working on solutions instead of delaying the solutions while we make the problems worse.
Deal. Thank you so much, Peter. We'll see you next time. Folks, if you've enjoyed this video, consider sharing it, and we will see you in the next one. Thank you. Cheers. Bye.